Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. I'm going to be talking about what silver has been waiting for, which is gold. An article written from Seeking Alpha posted 8 hours ago, so it's still fresh off the press. So anyways, let's jump into it. So the summary says that silver should be $17, $18 range. Because the ratio is still too high, the sentiment is the key to silver. The 2016 high looms large. The SILJ is leveraged to play on the precious metals. So the article starts off to say, passions and opinions in the silver market always run high. Some market participants believe there is a cable of institutions and governments that hold the price of the metal down. Recently, a handful of traders received government RICO indictments and spoofing of manipulating the price of silver futures. We'll likely see more charges on the individuals in the coming weeks and months. They're talking about JP Morgan manipulating prices or gold and silver in a bubble. Actually, 3 of their employees were arrested for this, called spoofing, where they're placing false buy orders on these exchanges and tricking people to think that they're buying millions of dollars in gold and silver and then canceling the order before it goes through, which is called spoofing. If you guys don't know that, I covered that whole article on what happened, who the employees were, how long this has been going on for, because Merrill Lynch actually did a similar thing a couple months ago as well. So it's definitely being manipulated to some extent behind the scenes, and that's not even talking about all the people that haven't been caught. But anyway, silver has been a manipulated metal for thousands of years. For the first example of manipulation dates back to around 3000 BC, when the first Egyptian pharaoh Menes stated that 2.5 parts silver equals 1 part gold. Setting the price of silver with a decree is a form of manipulation. In the 1970s, and by the way, back in the day, silver and gold were equal. The 1 ounce of silver was equivalent to 1 ounce of gold, so this was the first time when silver was actually manipulated to be less than gold. So in the 1970s, the Hunt brothers attempted to corner the silver market. However, they made a large fortune into a much smaller one with the commodities exchange. Changed the rules. It would not allow them to continue buying in the silver futures market. Meanwhile, the path of the least resistance for the price of silver will be a function of the market sentiment over the coming weeks and months. The direction is likely to depend on the path of gold, which broke above critical technical resistance level back in June. The ETFMG Prime Junior SLV ETF can be a leveraged instrument as it tends to outperform the price of silver futures on percentage basis on the upside. So $17 range. Silver's been bouncing around $1 range over the past weeks, which is true, and we've been seeing the support and resistance levels it needs to stay in between. It's usually around that $17.50 range and the $18 range. We saw it actually break through the resistance level up to $19.50, and it actually didn't fall below the support level around $17, which it needed to stay above, so that's good. So it looks like the bulls are still in the technical advantage. So as the daily chart of the active month of December silver futures contract highlights, the price has traded in range from $16.94 to $18 per ounce. So $17.57 on October, the price was just above the midpoint of the trading band. Open interest has been inflating, or has been flatlining between 209,000 and 213,000 contract levels since September, which gives few clues about the price direction. Price momentum and relative strength indicators are just below neutral territory. Daily historical volatility at 15% has declined from 35% at the beginning of October. Meanwhile, silver still remains historically inexpensive compared to the price of gold, which is true. This is going to be talking about the gold to silver ratio, which means how many ounces of silver it takes to equal 1 ounce of gold. Right now the ratio is around 85 to 1, meaning it takes 85 ounces of silver to equal 1 ounce of gold. Historically, it's around 40 to 1. Back in the day, it was in like 12 to 1, actually. In biblical times and all that, but yeah, for a ratio to be quote-unquote high, it has to be above 50 to 1. We saw the ratio around 95 to 1 earlier this year, which was extremely high. So the silver to gold ratio measures the value of the two metals that tend to move higher and lower together. The ratio is determined by dividing the price of gold by the price of silver. So the long-term quarterly chart shows 84.62 ounces of silver value in each ounce of gold. The ratio is well above its long-term average, which stands around 55 to 1 level. The ratio rose to a high of 93 to 1 earlier in July, but silver still gained on gold since then. A return on the long-term average at 55 to 1 put the price of silver over at $27 an ounce, with gold at $1,490 level. At $17.57 in October, the silver could have lots of upside room if the ratio returns to its average level since 1974 at $9 an ounce, below the ratio of gold. Still remains cheap compared to the current price of gold, which is true, and that's why people invest into silver. More importantly, is because silver is undervalued compared to gold. It's gold that is that's gold is the one that's already at its somewhat natural price, but silver is the one that actually is undervalued because the ratio is still so high. So for the ratio to close back down to more normal levels, this means that silver is going to have to appreciate up to gold, and gold's more than likely not going to depreciate, fall that low down to silver. It's going to be silver the one that has to appreciate, because the ratios have to normalize back out, especially since both of these metals are so fundamentally valuable in the everyday world. So the future, hold on, let me see where we're at. So sentiment is the key to silver. Supply and demand fundamentals in the silver market are less significant than the market sentiment. Silver is the byproduct of other metal production. Lots of other output each year is not sensitive to the price of the metal. Silver has a long history of moving higher or lower when herds, the market participants, flock to the market or push price lower back from speculative selling. The future path of least resistance for the price of silver is likely to depend on gold's path. And silver is gold's little brother. Usually when gold moves first, and silver will follow suit a couple weeks after. So that's a great way to get an insight on where you think or where silver will be moving in the next couple weeks. If gold is pushing forwards a lot, that usually means silver will follow, a couple weeks after. So the current level of technical resistance for gold stands at the early September high of $1,559 an ounce. At that time, silver traded $19.54. Gold had broken above its July 2016 high at $1,377 and has not returned to that level. So, however, silver stopped short its peak at July 2016, which was $21. So if the gold market begins to rally, we are likely to see silver prices appreciate. A move above the critical level, just over $21 per ounce, could shift the sentiment and cause herds of buyers to return to the silver market, which then would put all this new money in. Plus there's several other influencers with silver's price, whether it's stock market volatility, the geopolitical fear, all that as well. So a bull market in silver occurs rarely. And since 1980, silver's only exploded to either the upside of $50 per ounce or that level twice. So, and yes, since 1980, also in 2011, silver was $50 an ounce as well. So the continuation of the bull market in gold would likely fuse under the silver market. So, I do not want to. So the quarterly silver chart illustrates the critical level on the upside, and it's $21 per ounce. Above there, silver would run into a minor technical resistance at $25, which probably would stay around there as a lot of people capitalize and sell off. So I'm not going to go over this entire article. I do want to talk about how this leveraged to play on the precious metals. So it goes on to say the physical market for bars and coins in the futures options on COMEX division in the CME are most direct routes for a risk position in the silver market. The futures have a delivery mechanism that allows for a smooth convergence with the physical silver market. A host of the silver ETF products, including the SLV, USLV, DSLV, and others, replicate the price action in the market. Shares of silver mining companies often outperform the price action in silver futures market on a percentage basis on the upside. At the same time, during bearish periods, silver mining stocks tend to underperform the price action on the downside. The ETFMG Prime Junior Silver ETF hold shares in many of the leading junior silver mining companies, including all these, and you can see the percentages. So it just shows where how these are essentially the same markets, but some of them do move. And when it comes to mining, the physical bullion is going to be key, and it's going to definitely be influencing the prices because there is a shortage, and since these miners are finding silver from bypassing by accident, basically focusing on gold, lead, and zinc, and there's definitely a silver shortage with the demand peaking that could definitely also cause prices to rise. But anyways, I'm going to wrap this video up here. Like I said before, the link will be in the description if you want to check it out. I highly recommend it. You know, I didn't cover everything because the article is pretty long and I like to keep my videos at a timely manner. But I am curious what you guys think about this article. Do you think that silver has been waiting for gold to make a big move, which would really push prices, or do you think that silver can move on its own? I think gold would definitely have to, especially as it becomes in the spotlight, as media covers it. But over a long period of time, I definitely think silver is still going to be outperforming gold in the long end spectrum. But anyways, thank you guys for tuning in. Make sure to smash that like button, subscribe if you're new because I do post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.